Good morning, traders and friends, and welcome to the market forecast for Wednesday, August the 21st. John Hoagland, as always, thanks for trusting me with your time. We're going to take a look at the markets this morning, try and put a little context over them, see if we can find some decent ideas for us. For opportunities today, a couple of our markets really trading very close to or at important inflection levels. We're going to take a look at those very shortly. I'd like to start with the economic releases due out today. 9 o'clock, existing home sales due out. 9:30, EIA crude stocks due out. And then everybody's waiting for 1 o'clock when the FOMC minutes FOMC meeting minutes come out, excuse me. You know, what they said at the last meeting is, of course, going to be very important. I think even more important is the Jackson Hole Economic Symposium starts tomorrow. A lot of eyes and ears will certainly be paying attention to anything that's said there. And Chairman Powell speaks on Friday, I think about 9 o'clock, 10 o'clock Central. We will be keeping you in tune with that, of course. In other news, traders and investors focus today on the FOMC minutes. Of course, markets see a certain 0.25% rate cut in September. U.S. equities recover all of yesterday's losses as Lowe's, Home Depot, and Target all kill expectations for revenue and earnings per share. Crude prices have caught a bid last night as the API releases a 3.5 million barrel draw in U.S. crude stocks. And the EIA today is looking for just under a 2 million barrel draw. So supply issue? Perhaps. Make sure you like, share, comment, question, feedback is always appreciated. Good morning, Manny, Alan, Gio, Tony, Wallad, Alex, Danelle, Deg, Rob, Dante, good morning to everybody. Nice to see everyone. Why don't we go ahead and jump into these charts right now, because we are dancing in a couple of these markets in some pretty important levels here. Starting with the daily in crude, we can see the daily in crude we are right up against and looking for acceptance or rejection at our weekly kickoff high, 56.70. 5 days higher, we've put in higher lows and higher highs. Rollovers ending today, pretty much. Okay, there's very little open interest left in the September contract. So we have longer, stronger money that is free to adjust inventory as needed, and we believe that this 56.70 is an important level for them to perhaps do just that. Our high yesterday, right up against this trend line, we're holding at weekly kickoff high right now. We're looking to find out, hey, do we have more participation? Are we bringing in participation, buyers? Is the volume better up here than below that level? Yesterday's volume was the highest since October became the front, and this is the total volume of all the contracts. So we did pick up a little volume overall on yesterday's attempted move to the upside. Because of rollover, volume and open interest can be a little bit tricky. We lost 14,000 in open interest, but that was largely because the September is going to be expiring. So it's a little bit tricky to try and gauge volume and open interest during rollovers in any of these markets. So we're just going to have to depend on what we see. Now let's take a look here. Well, we're wrestling with weekly kickoff high right now. This market took a look above it last night. Okay, before the open, it looks like some of those early to the game longs maybe got a little bit nervous. They gave us an opportunity to close the gap right on the open. The opening range remains the low of the session so far. The low of that is 56.43. Settlement down here at 56.13. We may have taken out our overnight longs already, and we're seeing buyer control from the open already. That low of the opening range can be a useful day time frame level. Even more important than that is that weekly kickoff high. That's a longer term important inflection level, and it seems as though the market is attempting to hold above it. We have not taken out the overnight high yet, so there's no gap on the open. Overnight longs kind of bailed before the open this morning. The trend lines that we're seeing on this 30-minute chart are suggesting buying weakness but that weakness would not probably come until we got near this trend line. So really the important level that we're looking at today is that 56.70 level. If we can hold above it, if we can bring in more participation and buyers above that level, I will look for continuation at least to up to about 57.40, which is pretty much the high of this move right here, 57.40, this little swing high. Take a look at the E-mini S&Ps now, also wrestling with an important inflection level, 29.28 weekly kickoff high. We got within a couple of ticks of it before the open here. And you know, it's been in a kind of a 3-day holding pattern. We can see that the highs and lows for the last 3 days are so far pretty even. It seems to be just awaiting information, right? FOMC minutes today. Jackson Hole the next couple of days. A little bit of inventory rebalancing perhaps in these last 3 days. In other words, if we're too long or too short, we're kind of balancing that out. And I think building some energy and possible momentum for a move away from this area. Has there been a hint of quiet buyers over the last couple of sessions? And I'm going to go ahead and introduce Delta into the situation here. Delta is the number of contracts that trade either on the bid or on the offer. Negative Delta, we have aggressive traders hitting the bids with market orders. Positive Delta, we have aggressive buyers lifting the offers with market orders. But for the last 2 sessions, the market has been faced with some pretty aggressive selling. The delta for the last 2 regular trading hour sessions has been totaling about 35,000 more traded on the bid than on the offer, but the market has not been able to move in that direction, and that sometimes can hint of stronger money waiting in the wings, just kind of piling up on some longs here, looking for perhaps a breakout to the upside. That seller aggression, unable to move markets even past the halfway mark in our weekly kickoff zone here, which is largely the zone we've been in for the last couple of weeks, even with all the volatility that we've had. Let's take a quick look at the 30-minute here. And here we go. So we've got a lot of overnight longs in this market. Maybe the overnight longs are kind of getting the idea that, hey, we've got an opportunity to look to the upside here. And they seem to be holding. They seem to be still aggressive. We got within 2 ticks of weekly kickoff high in the overnight. We may or may not have a little bit of a gap on the open here this morning, but we can just see that the market has been struggling above that level. If we've adjusted inventory for the past few days, if we've taken some of the longs out of the market, then those longs may be present to come back in to the market. If we've taken some of the shorts out, well, we've taken some of the buying power away from it. But we're suspecting that we've seen possibly some longer, stronger money compiling, putting money into the long side on this. So that may mean that we've got some shorter and medium time frame traders short up against here. And if that's the case, then I think we may see our breakout to the upside above that weekly kickoff low. Long overnight, weak money buyers in range or just above range. It's going to be interesting to see if we can start with a gap. Most important thing for me this morning in the S&Ps is watching that opening range. That 830 to 831 opening range may signal control from the open. If we open and we leave that opening range at the low, as long as it remains the low, I'll be looking for opportunities to look for longs. If we can't hold above weekly kickoff high, and if we leave the opening range at the upper extreme of the range so far, I'm going to be looking at an opportunity to perhaps bring the market back down to settlement. 29.89 quarter is settlement, and then we'll try and look at what we have after that type of situation may occur. Who knows? We're just looking for context. Important level here in the S&Ps for sure. Let's take a look at gold now. Okay, it's just kind of hanging around here, just trying to get comfy, holding above $1,500. Volume continues to drop off in this area, and indicating, well, we're starting to see a little bit of coiling action here, and we're probably going to see some moves away from that. When is the question? Where? Well, we've got our kind of balance area here. We've got right just above $1,500. We've got just above 1530, 1533 area as kind of a support and resistance zone in a longer time frame, and I think that's going to be where the move is likely to really kind of validate out of this range. Take a look at the overnight. We have some overnight shorts already kind of getting nervous. The opening range is I believe the low of the session, but we're really not seeing much momentum here. We really just kind of closed the gap, and so when we're in these types of ranges, we're looking at shorter time frame participation. Shorter time frame traders trade to visual short time frame levels, gaps, overnight high, overnight low, settlement, regular trading hour lows and highs from previous sessions. We've kind of been butting up against the low from yesterday's session. Okay, so we just got to look for the visual levels that short time frame traders look at in order to find decent opportunities in short time frame control. All right, here's the euro. Seemingly a little bit of a dead cat bounce out here over the last 4 sessions, really just kind of dragging along that weekly kickoff low of 1,100. And not really rejecting back into the range, not really accepting below that level. 4 days inside, okay, we've got very little extension outside of this area for the last 4 days. Again, we're in short time frame control. A little bit of a better volume on the upside yesterday, although we did lose open interest. We lost about 4,000 in open interest on the preliminary bulletin. Not necessarily meaning that we brought in buyers above that level. So we still kind of remain range bound in the euro for the last 4 days. Let's take a quick look here at the 30, see if we can find any information that we can use. And unfortunately, we don't really have any overnight inventory with which to work against. Okay, when the overnight inventory gets too long or too short, sometimes we'll get that move back to settlement like Dan was talking about in the recap yesterday. We don't have that today. So here we are, we're still in the range. Dan was noticing yesterday in the recap, this range has been providing some decent opportunities for the last couple of sessions. Every time we get up here, it seems to fail. Every time we get down here, it seems to fail. We're going to be looking for those opportunities today. Overnight high, settlement, weekly kickoff low, I think are your important levels for us to look for in the euro today. So, I'm going to see if we have any questions here. Hello, Dante, Jason, Cameron, Ezra, good morning. Lou, Manuel, Deg. Will the FOMC minutes have an impact on markets today? Well, there's a pretty good probability that they will. It really just depends on what was discussed and what they were thinking about moving forward with rates. So can't say for sure, but there's a pretty good probability that they may have said something or will say something that may move these markets. Good question, Deg. Tony, when a market has a negative delta and no selling ground is made, it's usually passive buying. Sure. Yeah, well, I think that the longer, stronger money, they don't want people to notice when they're getting in and out. They try not to get in and out during emotional moves or emotional periods, so they just kind of hide in the I call it, they're like a snake in the woodpile. They try and hide their activity, and they do so using specific orders like ICE orders or growler orders, and In the S&Ps for the last couple of sessions, we've seen a lot of aggressive sellers meeting with somebody in there that seems to be scooping up that aggressive selling. So I think today might be a good tell as to, how good and, how, everything is a probability. Everything in trading is a hypothesis. And all we're doing is gauging the information that we have and then making a hypothesis on what may be going on in the marketplace. And I felt as though it was a strong enough feeling for the last couple of days with that negative delta, and the market really unable to continue to the downside even with all the bad news out there. It just seems like there's something else going on there. When you have that divergence between the aggressive sellers and price moving in the opposite direction, that means there's a snake in the woodpile. So I'm going to try and keep up on when we see these things, even when it's just an inkling or a possibility, because some of the best trades that I've been able to make in the last 10 years have since going on screen have been related to that delta divergence. When delta is opposite direction, something else is going on. So just a kind of a thing. All right. I think we're good. I'm missing my opening range here in the S&Ps. Hopefully you're paying attention. Hopefully you find a way to take advantage of it. I'm going to take my deep breath. Thank you, as always, for watching. Make sure you stay humble, grateful, and creative in your trading today. Let's get out there and profit. We'll see you at 2 o'clock for the market recap. We'll see what the FOMC minutes have to say, see how these markets have played out for us. We'll see you then. Trade well.